All right, guys, welcome. Today we're going to be talking about some key points that I want to point out with my trading. We're going to be going over timeframes. We're going to be going over the Pine Script just a little bit. We're going to be going over rising and lowering channels, what to do on trend days when it's trending up and trending down. Then just a little bit about the stochastics because I've been looking at it, I've been using it, and we're just going to talk about it a little bit because I'm still educating myself. I don't want to steer you wrong, but I want to show you what I see. Uh, with the best information that I can possibly give you. So let's start out with time frames. So you guys usually see me sitting here with a 1 minute and also a 5 minute time frame on my charts. That's usually what I'm sitting at on my two TradingView time frames. What I want to explain about these time frames is that when you're trading within a time frame, I said this on the live earlier today in the morning. When you're trading inside of a time frame, whenever you're trading on a 1 minute, you're going to be holding a position for at least 1 minute. It's not going to be 10 seconds. It's not going to be 5 minutes. It's not going to be, I mean, it can be 5 minutes, but if you're holding it for 1 minute, you're looking for a 1 minute scalp. You can get a prime setup on the 1 minute if you're looking for a setup on the 1 minute, other than looking for the play on the 5 minute. Then you'll be looking for the entry on the 1 minute, but you'll be holding it for 5 minutes if you're seeing the play on the 5 minute. So you have to use time frames in order to know. I mean, that can just give you a good sense of how long you should hold that trade and what you should be targeting for within that time frame, and if it's possible. So, for example, if we were looking at a lowering channel, which I will get into, I just want to show you an example really quick. If we're looking at a lowering channel and we're seeing this potentially, for example, this 1 hour hold, which it is right now. If we Now it's not, but if we see this coming up, coming down, doing its thing on the 1 minute, coming up, and then it comes out to the 1 minute, and it breaks above, we're going to be checking in, and we're entering in on this 1 minute candle because we have conviction. We want to get into it early, and we're looking for like a short time frame bounce. Obviously, it didn't bounce, but if it did, we'd be looking at what the next 1 minute candle is going to do. The next 1 minute candle comes up. You want to take what you can out of that 1 minute candle, unless your 5 minute is telling you something different. If your 5 minute is showing some more strength in it, then you can hold it. You can get in on your 1 minute. You can find an execution zone. Like you could be executing maybe around this hourly level. Then you can be looking at your 5 minute and saying, okay, well, if the 5 minute holds, there's a potential that we can hit 797 within the next few minutes. So you set up on your 1 minute. If you're looking to hold it for longer, look at your bigger time frame, and that's how long you can hold it for. So set up on the 1 minute, and if you want to hold it longer, look at your bigger time frame and see if it's going to continue. Obviously, that did not work, but it doesn't matter. It was just an example, if that makes sense. So that's the biggest thing with time frames. If you're going to be looking at the 5 minute for a setup, and you're also looking at the 15 minute, then you'll be looking at your setup for the 5 minute. You'll be seeing if there's something at play. For example, a rising channel from here to here, rising channel. If you're seeing a 5 minute breakdown, which I'm guessing I'm going to draw this and it's going to go the other way. But let's just say we're seeing this and we're seeing a rejection, or we see a possible breakdown. God, I hate this magnet tool. Hold on a second. Turn that magnet tool off. We see a breakdown, then we see it come back in, come down, then it just hits the channel and breaks down. We'll be looking for the 5 minute play for the rejection of this rising channel, and we'll be looking to continue to hold it within the 15 minute to see how much we can get out of this. Obviously, we'd be looking at like these different levels in confluence with what we're trying to trade. So we'd be looking at the hourly, the 15, and the daily to see if we can get that type of move within that type of time. So does that make sense to y'all? It's just a very basic idea of how to use time frame. If that makes sense, put a 1. If it doesn't, put a 2. And put a 3 if you know what I mean. But that's pretty much the basics of time. I'm late 3 always. And wait, are you being serious or does that make sense? Oh no, I'm not talking to you. I'm talking to JVM. So just depending on Bro, I'm just fucking around. Okay, cool. So whatever time frame you hold is the amount of time you're willing to trade that exact setup. Uh, we were just talking about time frame, how long you want to hold time frame for, how long you want to hold your trade, depending on the time frame you're in. If you're in the 1 minute and you're seeing a setup in the 1 minute and you're taking it off to 1 minute, you're going to be holding that trade for basically 1 minute. If you're seeing the setup on the 1 minute, but you're taking the trade off to 5 minute, but you're waiting for your setup to happen on the 1 minute, then you can get in on the 1 minute, but you're going to be holding for at least 5 minutes. Because if you are trading this and you are short biased, you're going to be looking at rejections off of these other highs here. So you'll be taking the short if you're like, okay, well, this 1 hour is not going to hold. I'm going to short it in this 1 minute after we break this parallel channel. If we break this parallel channel, it looks bearish. We still have a 4 hour here, but it looks bearish. So you'll be taking the trade off the 1 minute and then looking at the 5 minute, and you'll be getting your stop loss more so off of the 5 minute, whatever your account can handle and whatever size contracts that you're having at that moment. But you'll be looking at the rejection off the other 5 minute rejection candles and seeing if you can get it continue in your certain play. So that's the basics of that. Now, I also trade on the 100 tick. The 100 tick also gives you some solid information because time based doesn't always give you the best identifiers of what's happening. I like using the 100 tick, which is 100 contracts per candle, to give me a sense of idea of if there's like bidders stacking in, selling or buying. It helps me a little bit better with my entries. So it's not exactly time based. So I like using time, but I also like using contract based candles as well, which I use directly through my Trade Evade, which is right. Okay, what? Yeah, I'm recording. That's fine. Showing, I got you. I'm recording it. So, second thing I want to talk about, 100 tick or 1,000 tick would be better than time based at all. Yeah, I mean, some people use 1,000 ticks, some people use 100 ticks, some people use 2,000 ticks. So it just all depends on what you feel. Like I like the 100 tick. I enjoy it. I'm a big believer in volatility. So um, I use the 100 tick, and that gives me the best volatility that I can possibly get. Also, the best entry that I can possibly get. It doesn't work for everyone, but it works for me. Yeah, it's nice and fast. Second thing is the Pine Script. So I'm just going to go over for anyone that needs to hear this. The Pine Script is very resourceful. It works really well. For anyone else watching this, join the Discord. You can get access to the Pine Script through LaunchPass. It's not needed. It's just something that we've built and something that works, something that makes us money. It helps guide us through the day. So we're not just looking at a blank graph. It really helps us guide us because if we're just looking at this, we got to consistently search for support resistance, all these different things. There's a lot of other indicators that give you this, but this for me has been something that has worked really well. Of course, there's always times that things fail, but there's a lot of the times it works really well and gives you just a little bit more context to what you're looking for. But just to give you the the short and sweet. Um, Daily, 4 hour, hourly, and 15 minute does not mean it is the actual daily 4 hour, 1 hour, and 15 minute. Again, I can update this Pine script to make it say something different, but to give you a visual, give you a thoughtful idea in these, like I've said before, daily, think of it as a steel wall. 4 hour, think of it as a brick wall. 1 hour, think of it as a cardboard wall. 15 minute, think of it as a paper wall. It's basically it's basic elementary thought process. The dailies are higher strength, and then the 4, and then the 1, and then the 15. These could obviously be renamed to something different, but for the time being, this is what it is. And you can also get accustomed to the colors of them. So when you see the color, you know that it's that amount of strength. I mean, red is pretty hot. Then there's orange, which is, just as hot. And then purple, and then we get a lighter blue, which is more of like a softer color. So you can basically visualize the strength of them just based off the colors. I'm a big visual learner, so when it comes to visuals, that's what I like, and it works really well, especially in place with our rising and lowering channels. Now, in context with that, let's go over rising and lowering channels so I can explain how to use the Pine script with rising and lowering channels. And I'll give you some examples from today that we used, and I'll explain trend days after. So when we are coming in to an area like this, I'm going to turn this one green so I can decipher. So when we are coming into a rising channel, I always short rising channels. Always. It's the opposite. If it's rising, we're shorting. If it's lowering, we are longing. And I will show you exactly how this works. So I just told you what the red, the orange, the purple, and the light green, the teal, stand for. Red is a steel wall. That's the daily. Orange is the 4 hour. That is a brick wall. Purple is a cardboard wall. It's the hourly. Teal is the 15. That's the paper. So it's like playing rock, paper, scissors, but you're playing it with the charts. This is also, I always say, this is an adult version of musical chairs. First one to sit down wins. First one to take profit wins. So in context to the rising channel, which I draw a load of them on the 1 minute, and then I look at them on my 5 minute as well. When I have the exact same chart up, it just makes it for me. So I look at it on the 1 minute. It doesn't make as much sense on the 5 minute. It's harder to depict it, but on the 1 minute, it's really easy to see. So I go to my 1 minute, I draw my parallel channels, which in order to draw your parallel channels, you usually get the wick of the turning point. So like this wick, this was the turning point of where this was going. You could say this one was at 2. You could draw your parallel channel here. You wouldn't be wrong. You'd have the same type of information as me, but it's just up to you. It's all personal preference, but usually want where the turning point of where it's changing direction to start drawing that rising channel or lowering channel. It goes the opposite way. If you get the top of the wick of the other ones, you get the lowering channel, just like this. The turning point right here, we drew the parallel channel here. You could also draw the parallel channel here. It won't hurt you either way, as long as you get as many candles touching as you can on either side to make it as clean as possible. So when we have a rising channel, we're looking for a few things. We're looking for rejection when we're going for a rising channel. We're looking for the best rejection point and break of that rising channel. And we have that exactly here. We get some bounces off the hourly. We get some resistance on the 15 minute. Looking strong, but looking weak because the hourly is holding, but the 15 minute is also resisting it. But it wasn't weak enough, so we busted right through it and we went straight to the daily, the steel wall. Past my accounts, only problem I only had. Oh man, we'll talk about it later. So we had the hourly holding, we had the 15 minute resisting, busted through it, and then we came to the daily. This is when I start getting interested because now we're at the daily. What could happen off the daily? Well, if the 15 minute was trying to be resisting and it broke right through, which is a paper wall, now we're at a steel wall. So it's going to take a lot more effort for this to push through. There are people that bought this, FOMO'd in, that bought in. I don't think in our Discord, but there are people around the world that bought in on this candle are like, this is going to go. Like, this is going. And they bought in early and they were expecting this daily to hold or whatever level of support or resistance that they had. They're expecting this to turn around right here, but it didn't. And this is in respect to our daily level right here, our steel wall. We watched it, we saw it break, and then we saw it try again and reject. And then we became even more interested because now we're breaking the parallel channel. Once we start breaking this parallel channel, we need to see how this candle is going to react. Now, obviously, it rejected straight down to the daily or to the hourly, and it bounced. But we never came back inside that parallel channel. So, with that being said, what do we have below that will hold us back from dropping more? We have a 15-minute. Now, we already know 15-minute, that is a paper wall. So, if we're rejecting a daily and rejecting the parallel channel, the rising channel, that gives me two confluences, two ideas, two more solid ideas than having nothing, that this can potentially break down. Now, if I was seeing this and this candle happened, we got a rejection, but it went straight back up. So we had a very, very high chance of being able to get inside this candle, getting inside of here anywhere. So if we got the top of it, 1928, if we either got the top of that, 1928, or we got even the bottom of it, 1922, that's only a 6-point difference. That's pretty big if you have a big contract size, but 6 points isn't huge, but it's workable. So if we're seeing that reject, we can get in at 1922. Let's just say worst case, we got a 1922, or even worst case, we got in at 1921, whatever it be. We will see, not always, but there's a higher chance that this will break down because this is a 15-minute. And our first take profit, where would it be, guys? Where would our first take profit be if we were in a short here and we saw the rejection off the daily, we saw the parallel channel break? Where would our first take profit be? $894, exactly. Our first take profit would be $894. And why is that? Well, that's because it is our next strongest support that we have. It's the next, the hourly, exactly. It's the next strongest support that we have. We don't care if this breaks the hourly and goes lower. We do not care. No one cares. No one should care if this keeps going lower. What we care about is making money. We're not in the business of sitting there and wasting time while we're in a trade that's making money. We want to make the money, be done with the trade, get our confidence up, and continue to trade the rest of the day. So we're not feeling beat up or we're in drawdown or anything like that. We just want to take it, make it, and get out of it. That's it. Nothing more to it. If we have other levels, get in, get out, and get ahead. Exactly. You got it, Omo. So this would be our first take profit. Now, would it be my full TP? Maybe, depending on how many contracts I'm in and depending on what the chart's looking like. But I probably would have been feeling a little bit more good about it if I was in like 2 contracts or something like that. I'll show you stop loss in a second. Let me just explain the take profits. When you break down and we're hitting this first TP, I probably would have taken out most of my position and held a little bit of a runner. And as we dip back into here, if I saw some rejection, some support here, I probably would have just closed out the rest of them after we started holding back above that hourly, because I would be too unwilling to take any more of a. I mean, you could set it at break even where you got in at. You would still be up if you got out of half your position or 2/3 of your position, but you could put it back at break even and just let it ride and do whatever you want. Stop loss. So depending on your account and depending on what you're willing to lose is where your stop loss will be. My rule of thumb is 1 NQ is 10-point stop loss. So if you're risking 1 NQ, you're risking $200. So you're willing to lose $200 if you're in 1 NQ. If you're in 5 MNQ, which is half an NQ, you will be risking 20 points, which is still $200. If you're in 2 MNQ, you can risk 40 points, which is close to $200. So it just depends on your contract size and depends on where we are on the chart. So if I saw, let's say we got in at 1921 or 921, let's say we got in there, I would be looking for this to hold underneath this parallel channel. So I wouldn't get out even at 1926. That's only 5 points. I'd be more at odds with it if we started to reclaim, if we started to reclaim this parallel channel, like if we broke down and retested and broke down again, and then we came back up and we held above our position for a second, because usually it doesn't go straight back up. But if we started holding above our position for a second and we started to trend back up, I probably would have my stop closer to 1935, 1940, which for me, which would be about a 20-point stop loss, which makes sense because I usually trade 4 to 8 MNQ at a time. Then I add into my position depending on how I'm feeling. But it would be around 1940 with 5 MNQ because that would be a $200 stop loss. Sorry. Yeah, $200 stop loss. So it would be basically this area that the daily is at. Our stop would be the daily, pretty much, just that next line up. It's not always going to be like that, but it would be pretty much this area up here because it would kind of tell me that there's still buying pressure and they're holding it. It could come back down and break down further, but that would be probably my ultimate stop at the end of it. Can you share the trading view thing I asked earlier? Let me see what you said. I got a couple of questions, guys. How do I have my trading view exactly like yours? The time first? Yeah, I can show you all that. Let me do it at the end of the stream. Let me just explain these few things before I do anything else. Hey, Omo, if you can go into the main chat and guide VIP Global to the launch pass, I would do it, but I just got to get this done. Okay, so that is how we trade a rising channel. And Bull, if you missed any of this, it's going to be recorded and posted. So I got you. So basically, that is how we do a rising channel to get a short. Now, how do we do a lowering channel? You may be asking. It's the same damn thing, just in reverse. So we get the lowering channel here. And this is immediately after the rising channel. So you could have double dipped on this. It probably would have been hard because you're like not thinking in that direction. But let's say you were able to. We have the lowering channel. We have a support, the 1 hour support. Now, right above it, we have a 15-minute resistance. Now, considering that we already see, like we had 1921 as our area, but considering that if we have another, like these other resistances, like right before the breakdown, this 1924, we have a lowering channel. We have the 1 hour support, which is a cardboard wall, which is still pretty significant in comparison to a paper wall. We see a breakdown, and then we start seeing it break out of the parallel channel. This would have been hard to catch in hindsight. This would have been hard to catch because it was such a big move in such a short amount of time. I don't know what it would look like on the 100 tick, but it's probably pretty quick. But we would wait for a support to be reached, a break of the parallel channel, and then we would wait and see if we usually want to wait for the next candle to confirm. We usually want to wait for like a candle, like, if I can even draw. Okay. We usually want to wait for like another candle afterwards, something like, like this, whatever. If this was a body of a candle to confirm that we're holding here, something like this. We want to see it come down, come up, retest support, come back up, and then possibly retest this parallel channel, and then come back up. That's what we want to see in reality. It happens a lot. That's what we want to see. We want to see it hold a support, break out of the channel, come back, retest the channel, and break back up. Now, where would our first take profit be? If we were able to get in somewhere in this candle, let's just say we got in here at 1908, just random, 1908, where would our first take profit be? Or where would our first partial take profit be if we were in this position? If we were here on the hourly and we saw our first resistance at 1917 or at 917, the 15-minute, and then our next resistance at 940, where, if we were in, let's say 2 MNQ, just to keep it basic, where would we take off 1 MNQ at? Who can answer that for me? Correct. Omo, you got that. So trades for fun, yes, that would be one of our take profits. 917 would be our first TP, because that is that's our first resistance. Then 940 would be our second TP because that is a very strong resistance, and we don't know that's going to go higher. We don't have this information yet, so we don't know. And again, if we would have taken the final TP at 940, and then we saw a break back down here, we would have been like, hell yeah, like we just got that. It looks like it's breaking back down, but then we've been like, damn, it went higher. But that doesn't matter. We don't care that it's going higher. We just care about where our take profits are going to be. That's all we care about. We don't care about anything more, anything less, nothing more than that. And again, our stop loss would probably be, if we got in at 1908, we would be looking for this hourly to hold. If it stopped holding, I would be expecting to get out if we start breaking down more. It would probably be more of a manual mental stop loss. But if you wanted to be serious about it, you could probably do 18 or 892 or even just the hourly support. If you got in around this range, you could do this red wick. Yeah, it's pretty fat. That's a pretty big drawdown. So it makes sense. Mean reversions with levels for ranging PA. How are the levels calculated? Are they equal distance from one another? Fib levels interesting, and how you work with the trend. I assume you use the channel. So they're basically just 50% of each other. Every single line. It's nothing crazy. And it's just set up from the daily high, daily low. So there's nothing more to it. It's all pre-calculated, and it's constantly moving. Every time we get a new high and new low. So you don't even have to program anything. All you need to remember is that steel, concrete, or brick wall, steel, brick, cardboard, paper. That's all you really need to know. Then when is it going to break out from the lowering or rising channel? The trend days are going to be a little bit different. I'll tell you about those. But let's go on to trend days. What do we do on a trend day? Like, what happens when we're on a trend day and we don't have a setup? Like, we just like this. Let's see, where did it trend at? Time is that at? Okay, yeah. So it was trending in this area right here. So we were trending, just kept trending. It's like, well, where the hell do I take a short? How do I take a short here? Well, you don't. You don't do anything. You just don't. For me, my setup's not there. You just don't. And if you want, because the reason you don't, I'm going to tell you how you can take a trade, but I'm going to tell you don't, because you don't know what is going to happen. Again, this is an adult version of musical chairs. When the music stops playing, who's the last one to sit down? Because you could be getting in, and then you just get whacked and it just drops. So if you don't see the setup, do not take it. But if you're like, well, there's a lot of good news, there's a lot of good earnings, there's a lot of this, that, the other, you're like, this feels pretty bullish today. Well, you could wait. You could literally just wait for some consolidation, wait to see what the trend is doing, try to get an idea off of these lines that it's coming towards. So let's say we're seeing it. First off, we're seeing this. We had 998 today as a pretty strong resistance, from all day, from yesterday, whatever, support resistance. It comes above 998. Now you start getting interested. You're, okay, it held 998. I'm going to wait for the breakout long. I'm going to see if I can get the breakout long after we form above 998. You can take a long here, and your first resistance is going to be the 4 hour. So, I mean, your first resistance is really going to be 20,009. But if you're looking for a breakout long, you're looking for an extension. So usually when there's breakout longs, there's a pretty decent size extension off of the candle. So I would be aiming, if I took a position above 998, I would be looking for an extension up to this next large resistance, which is the 4 hour. So that's how I would play it. Then I would continue to just monitor and see where we're holding, what the next level is. If we end up breaking above the 4 hour and we start holding it as support, then I'll be willing to potentially take out another breakout long to the next strongest resistance, not the paper one, but the next one that's more strong. So you could take a long here at 3.2, and your first TP could be 5.6. It's literally level to level. Look at how this worked today. Level to level, level to level. We wicked through that level, but look at it, almost touched the next level. Actually did touch the next level. So this is consistently hitting level to level. Sometimes it's a little weird, But when we are doing breakout longs and there's a trend day, it usually goes level to level because it's algorithms buying these. So algorithms are all math based. So they're being very calculated on how to buy it. And you can see it in each one of these moves. It's very calculated. It's very, very well performed. This is all just algorithms buying and buying and buying, level to level to level. So that's what you can expect on trend day. Trend days are not easy to trade for me. They're extremely hard for me to trade because it's not part of my process. It's not part of my setups. So you just got to be willing. These are higher risk setups, so you should be lowering your contract size. Um, but you can still make money on them. You just want to lower your contract size when you don't have a perfect setup that you're looking for. If I don't have the setup that I'm looking for, like my rising and lowering channels, then I won't risk as much as I would with a prime setup. If I don't have an A plus setup, I won't risk as much with a B plus setup. You just got to be willing. If you want to make money, you just gotta you gotta de-risk. Yeah. So yeah, the market, like ZK just said, trend markets are not constant. That's why I love trading because they're not constant. It's only so often that the market trends. And when it does trend, it's harder to trade. And when it does a trend, it's easier to trade. I feel like I can trade every single day, but some days I take way less trades than others. Some days I make more than other days. But any day I know I can make money if I see my setup. I know it. There's like a 60/40, 70/30 type percent chance that my setup will work. There's no guarantee. Never a guarantee. No one's saying this is guaranteed. Unless you know someone that knows someone that knows someone, you still might be wrong. Still might be wrong. Even if you know Jerome Powell, you still might be wrong. He might get it wrong. So you never know. Doesn't matter if you're wearing a blue tie, purple tie. I don't care. It still might be wrong because anything can manipulate the market. Anything. So it just takes a few players to manipulate what's going on in the market to make you feel super wrong. Because, I mean, like today, we kept going up. Like the market was super bullish. And it's like, this thing isn't coming back down. Then boom, it's down. It's over with. All that gone in a few candles. It can happen. Um, Now, let's talk a little bit about. Wait, should we not be trading channel breaks if they're not coming off a stronger level? You can still trade channel breaks, even if it's not coming off a stronger level. You just need to be more concerned with it not working. So you just have to be more hyper vigilant. Do you use constant liquidity ATS? No, I don't use any of that. Um, I don't do any of that, Mike. I just use specifically what I'm saying. I don't care about nothing. The only thing that I got today, the only thing, and I'm pretty sure I took the bounce play, which I think I lost in, um, was this fair value gap. This was a 1 minute fair value gap. This green box, this green box right here is a 1 minute fair value gap. And I don't use fair value gaps too often, but when I do, I like to see if it's going to come back to it and bounce off of it or break down under it. But this was a 1 minute fair value gap here around 1150, and we just broke straight through it. I was thinking we might get some type of bounce play, but I can't remember what my trade was like. Oh, yeah, I did right here. So I took a buy of 4 MNQ at 20,001. I ended up selling those. Did I really sell them? Did I buy more? I don't think I took a loss on that. Oh, no, here we go. So 20,001, and I got out at 1989. So I took a very small loss on this bounce play. It just didn't work out for me. After I saw it breaking 19,998, I think that was a 150 point loss or $150 loss, something like that. And we recovered that right away off of the short here. We recovered that loss really quickly. So I don't think, let's see, how many did I do here? Four, and then four. So I did 8 there. Did I buy them back here? 5, 4. Okay, so I actually shorted here, sorted here, bought back here. And then I shorted, and then I was still holding 4, even with this run up. And I shorted again, and I shorted again at this 998 level. And then I bought back all the way down here, and which I shorted at the 998. I bought back at the daily, and I think you guys remember that today. When I think I was doing magnets and shit. Oh yeah, I was. I was trying to get it down there with the metal. It's pretty stupid, but it was fun. But it happened. It worked. I wasn't convinced. I kept saying in the chat, I was like, I'm not convinced that this is good buying pressure. I'm not convinced here. This is not convincing to me. We have the fair value gap. We've got a lot of resistances above. I'm not convinced. And then once we started breaking this 986, this 1 hour, and we started holding underneath it, I was even more convinced that we were not going to go up anymore. I was trying to convince myself, but I was pretty convinced that the buying was not true, that this wasn't true buying. It didn't seem like true buying to me because we didn't get a lot of huge candles. True buying would be like larger actionable candles, but it worked. I think I made $600 off of that trade in total, which was nice. So yeah, the magnets work. What are we gonna do? You guys gonna get mad about that? Shit, could get some rockets in there. Trust me, we're gonna have a rocket day. We're gonna use rockets and we're gonna make a lot of money. You're gonna see it happen. Hey ZK, I don't know if you want to hop in here and maybe talk about the stochastics just a little bit. Maybe you can help us a little bit. If not, totally cool. Okay, bet. Let's get it. Let me see if I can do this really quick. Are you there? Yes, I can hear. Wait, hold on one second. Let me add you in to the. Let me do this. Oh, what's up, man?
What's up?
Good to see you. Okay, let me see if
I
I
go
can.
on camera since you are.
Oh, that's cool. Okay, so let me put you. I guess this is fine. All right, go ahead, because now I have your audio.
Yeah, do you want me to share or do you want me to just kind of walk through what's on your chart?
You can share. Let me actually swap my. What am I doing here? Let me do this. Let me do this. Let me go like. Let me add. How do I do this? Okay, I can go into add here, and I can do Discord only. No, I don't want to do that. I want to do this. macOS screen capture, Discord only. Okay. Okay. And then I want to do window capture of Discord. Okay. Yeah, you can screen share.
All right, sweet. Let me make sure my crosshairs are visible.
I
know last time that was a problem. Is it this one? I think it's this one. Go live, I think. Can you see my screen?
Yep.
All right, great. Let me make sure it's the right one. Okay, great. You can see the crosshairs. I'm gonna go back to where the hell is it at? Oh shit. Back to that like heavy trending portion. Where was that? 848 today. So specifically looking at the stochastics, what Asher was talking about, like when you get this really aggressive move up, and for everyone's context, the chart on the right is a 1 minute chart, and then the chart on the left is a 3 minute. The stochastic settings that were shared are best used on a 1-to-3 ratio, but you can still use them if you're just looking at the 1 minute chart. I also have a 5 minute chart off to the side, and I'll kind of use the stochastics there, but just since the 1 and the 5 minute are so loosely correlated, it's kind of a pain in the ass because the timing doesn't really line up perfectly. But anyways, if you're using the stochastics on the 1 minute and you're in these like really, really heavy trending days, which I think we've had a few over the last
8 days,
5 or 6. Yeah. There's been at least 3 or 4 heavy trending days, for a couple hours or so at least. But what I look at, and it doesn't matter If you want to put moving averages on, you can. But what I specifically look at when you get these big impulse aggressive moves up over the course of an hour is, so where's market open? Okay, so market opens over here. There's a lot of back and forth, a lot of VWAP trading, which is just that yellow, like the yellow dot.
And by
And
the
then
way,
we
guys,
eventually,
he's in Denver, so he's an hour before me. So he's 8:30,
oh yeah, yeah,
where
sorry.
I'm 9:30. No, that's cool. Just
Yeah,
for
yeah.
reference.
So anyways, I avoid the VWAP. You guys can trade it, whatever. I don't care. But I pretty much stayed out around here. But then when we got the break above the VWAP and then we found support, someone had mentioned using the 9 EMA. You can use whatever exponential or simple moving average that you want. But what I look for, boom, big move up, and then you're holding a moving average. In my case, it's a 15 exponential moving average of support. And then I wait till we get the stochastics to reset on the 1 minute. And really your entry trigger here is, it's great if you get both your K and your D, which are the two lines here. If you get those to reset down to 20, that's typically a good entry point. But in this case, you didn't get that. So it only came down to, 25 or so. But what you look for to like your trigger to entry or enter these trades is typically when the stochastic starts to hook and your fast line, which is the red one right here, if you guys can see that. So it's not a really clean hook, but you really start to look for that, like that red line, or I think the default is blue on the standard stochastics. You look for that to start to kind of hook in the direction of your trade, and then you would enter one, or what I do, you would enter one tick above the candle that created that hook. And the reason why I wait for the entry and not when the candle opens, the following candle opens, is because you don't really know if it's a confirmed move up until you get the move after K hooks, and that's kind of how you time your entries on stochastic. So to give you kind of a good example of how that might bite you in the ass if you enter after it hooks, but it doesn't create a high.
Well, right there on
Uh,
9:22, it looks like it's about to hook, like it's resetting right there.
uh, yeah. There's like a little bit here. I think the first official hook is like actually on this 923 candle.
Mhm.
It creates this, and then maybe 924. It's kind of hard because it's not live, so who knows what it was doing, like because I it should be updating intra bar. But anyways, so let's say you entered at the open of the bar as soon as your stochastics hooked. In this case, you were like relatively flat for 4 or 5 minutes, but you never really get that confirmed push higher, especially now that you're below the moving average, right? So, and then I also use the Pine Script, so I'll look at like what other levels we're bouncing off of for additional support and resistance. But where the where the real power comes in with stochastics is if you have concurrent cycle lows or highs on either a 3 or a 5 minute stochastic. So I know Asher typically has a 5 minute stochastics pulled up. That's usually like if you can get a concurrent cycle high and low on the 3 and the 5, that's usually a good spot to enter. Let me, yeah, I think this is just like the best example of this is just really on these like really heavy trend days. So you have that big channel up that I know a lot of you guys plot on your charts. I suck at plotting those, so I don't do them. But yeah, every single time. So like this case here, we don't get the stochastic hook until 8:54 my time, 10:54 Eastern, and that's when the stochastics hook over. The perfect place to enter is right at the break of that bar, and boom, perfect timing on that. The hook right here on 8:45 my time. Again, a perfect place to enter, zero drawdown. Really, maybe you get a little bit. Who knows, like what this candle was like as it was forming, but 30 seconds or whatever at most of drawdown, and then you push up. Yeah, same thing here. A little bit of a hook. So yeah, so you can look at the stochastics and you can try to get an earlier entry, especially if it's bouncing off, say, like if you're using the Pine Script, if it's bouncing off of like a strong 4 hour support or a daily support. I would consider entering as the stochastics hooking just because you have such strong support below you. Or in the opposite case, it would be strong resistance. But yeah, you can't if you're looking to short, I would be really careful when you get these big moves up, because a lot of times the stochastics will hang up at the top of the channel, at the top of the stochastic range for a long time. So a lot of times after the hook, you might just get additional candles going in the opposite direction of your trade. So if you're going to short here, yeah, this one worked out 2068 to, you got 10, 15 points out of that or whatever. But if you short on the hook of this and you don't wait for the candle to break lower, I mean, you get fucked on that trade. Um, same thing here. Maybe you get a little bit of profit out of it. But I would just be really, really careful doing opposite of what the trend is doing on these aggressive moves up, and really use the stochastics to time your entries if you want to continue riding that move up. But just keep in mind, like as the longer this goes up, obviously the more the less and less likely it is that the trend will continue to go up. So like I always play wave 9 reversals. Wave 9, 7, and 11 are my big reversal trades. So I was looking for a short around here and I actually missed this entry, but anyways, I think that covered everything. I don't know if you wanted me to cover
Yeah.
momentum at all.
No, that was cool. Momentum is going to be momentum is cool. I really enjoy doing momentum. So yeah, if you want to show, let me show it on mine because it's a little bit
Yeah, yeah.
easier to see it.
Okay.
So if you guys look at mine, so if you look at my momentum here, what I like to look for on momentum, I have it. His chart's a little bit more cluttered. He's got his way of looking at it. Mine's really clean. I try to keep it as clean as possible, and keep it as simple as possible. He's got his a little bit more in depth, which is cool too. But pretty much what I'm looking for with momentum, which I'm sure ZK is looking for the same damn thing, is these momentum shifts. You can see we have our moment. This is the 5 minute. You can see our momentum is down, continuing down. Even though we're breaking down more, we're still breaking down more here. We start getting these deep reds, other than these lighter reds, where we can see the selling is starting to slow down a little bit. It hasn't finished, but it's starting to slow down a little bit. And as you can see, like even when we have this little hook here on these previous candles, this is a daily support. Just for example, daily support. And then we have this momentum starting to kick back to the green. As soon as I see something like this where we start turning green a little bit, I start getting more interested. I mean, you can see right when the momentum turned green, we boosted. And just because the momentum has turned doesn't mean it has to keep going up, because it didn't keep going up. It did go up, let's see, 997, about 30 more points, which is great. So as soon as this momentum starts turning, especially on higher time frames, it's more powerful. On lower time frames, let's see, where were we on this over year? So lower time frames, you can see it starting to curve back in. It starts to flatline on the 1 minute. And then on the 5 minute, we start curving. We start moving back into the green momentum. We start flatlining here. And then it starts getting more interesting, especially because the momentum is starting to shift and we're holding a daily support, a steel wall support. We're holding that and our momentum is curving back. We get the hook right here. We like ZK said, buy into the next candle. If it was me, I'd be looking at the parallel channel, this parallel channel coming down. I'd be looking at this. This is a prime example. This is multiple. This would have been the best long to take all day. The best one to take all day. Because one, we have a support, a very, very strong support. This is no measly hourly, 4 hour, or 15 minute. This is a daily, this is a midday, middle of the day, mid-range support. Strong steel wall right here. We have the lowering channel, the break of the lowering channel. Then when you come down to the momentum starts to flatline. And with that, we have a hook that forms on the next candle, which is this extension candle. But I probably would have gotten in knowing that this is holding the daily, which I didn't because I wasn't trading. I was doing other things. I get off at 12, so I didn't even see this happen. But if I was here seeing this happen, I more than likely 90% chance I would have taken this trade, seeing that this was starting to curve. It started to, you really wouldn't have known it was going to curve here, but the momentum shift is what was showing me that there could have been some more power in this long over anything. So this was the best. There's 1, 2, three and almost four, if you would have waited another minute, four confluences, one, two, three, four, that all add up to taking a long. So if that doesn't give you, if this makes you scared, then having two confluences isn't enough. Having four isn't enough. You need to start looking for a fifth one. But once you start over analyzing, you get analysis paralysis, like people have said, or ZK has said, other people have said in the Discord, analysis paralysis, where you're just looking for too many analysis to take a trade. But for me, I take two. With this one, there were four. So there were three, to say the least. And then this fourth one on the stochastics really gave us that buying pressure. And this is actually a beautiful trade right here. This is something, this doesn't happen all the time. All four of these lining up, and they're all lining up at such a perfect spot. So if hopefully that made a little bit, that was pretty good as well. Example.
You can look for divergences. I don't know. You just what the fuck just happened?
I don't know. There we go.
For divergences on momentum too, if you decide to use MACD, which is what that momentum indicator is, the bottom of Asher's screen. So for example, you see, I can't see what time that is on your screen, Asher. The big red wick down on your 5 minute.
This one?
To the left, right
this
there.
One?
Yeah, so
that's
look at momentum there. Okay, yeah, look at momentum there, and that's more of a convergence. But then you look over to the right and you have a much higher high on momentum and a slightly higher high on price.
Mm-hmm.
And those are the types of things that you should really look for if you do plan on incorporating MACD onto your chart. And then on top of it, just remember that stochastics were initially created to be a momentum indicator, but the settings are adjusted to be more timing based. So like if you look at where it lines up where Ash was saying the perfect entry, yeah, right there.
Yeah.
You're getting slightly higher highs or higher lows rather,
yes,
on momentum as well, or on stochastics as well. So that's a little bit of an additional confluence that you could look at, and almost like a slight W pattern that's forming on the stochastics. But it kind of takes time using the stochastics to like really be able to identify those. But yeah, you can keep an eye on those things.
Yeah, the W's are my favorite thing to go to. And yeah, this is what he's talking about with higher lows here. Higher low, right? This is what you're talking about, these bubbles?
Yeah, exactly. Okay. That. Yeah.
Cool. Yep. So yeah, sweet. Awesome. Love it. I love that. That's really great. Would you recommend using the 4 hour and daily to take a better setup? We are intraday traders, so we look for smaller time frames. You can get a bias off the 4 hour and daily, yes, but I do intraday, so I really don't care which way the market goes. It can go every way but left. I don't care, but you can get some bias off of doing that. Oh, on the Pine Script. I'm new here. Would you recommend only using 4 hour and daily ticker? You can. You definitely can. You'll probably get a lot more realistic results if you use higher time frame lines because they are stronger. Yes, but you may also miss some moves. I mean, I usually wait for the 1, 4 in daily. I usually wait to take a bigger size move. But depending on how that line is reacting previous in the day might make a exception for me. Like if there was a 15-minute holding as a support so long, then how I like to see it is supports turn into resistances. If that 15-minute gets broken, I'm going to be targeting like on the short side if there was a 15-minute as support. Like if this 15-minute was support and it kept holding as support again, support. Then we got a momentum shift here. Like if I had the proper, like if I was doing a rising channel here and I saw us break this hourly, I would be looking at this support as a area that it will break back down from. And I would be taking my short, breaking the 15, and my target would be the daily, if that makes sense. But if you're taking it strictly just off of that line, you need to have more confluences. You need to have more detail of why you're taking that. Really quick, guys, I'm just going to wrap up the recording so I can not have such a big file. But I'm still going to stay on. But I'm just going to wrap it up. But I appreciate you guys being here. Hopefully that resolved a couple of questions or gave you some more insight. We went over timeframes, how to hold your trades depending on the time frame you're choosing, 1, 5, 15, depending on the setup. We went over the Pine Script, which is great. You can get access to it within our Discord community. We went over rising and lowering channels and how to use those in confluence to the Pine Script. What to do in trend days, depending on how the trend's going. How you can use stochastics and MACD within those trend days to get a better entry to try to follow the trend and seeing where the best time is to buy that entry to continue with the trend. And yeah, that's pretty much it. I mean, we answered a few different questions. Hopefully that helps a lot of you. If not, we're here every day, 9:30 to 12 every single day. So continue to follow us, continue to trade with us live. We're always trying to make some money here. Today, I think we made about I don't even know, $3,000, I think, in the live, and we did well. So I appreciate you guys being here.